Hello, in this video we will take a look at how to trade bearish absorption. I assume you've just watched the video on how to trade bullish absorption, and I can tell you right away that it's exactly the same process, just the other way around. So, when we talk about the bearish absorption, it means that a large mass of aggressive sellers is absorbed by a huge limit buy order. A big player uses a limit buy order to enter a long position, and that's through aggressive sellers. So aggressive sellers are some sort of fuel for this big limit buy order. Ideally, we want to see bearish absorption at strong key levels from higher time frames. On the footprint chart, we can recognize bearish absorption through a large negative delta without any significant move to the downside. All of that supported by big volume. So how to recognize and how to trade good bearish absorption setup. Same as with bullish absorption, we need key level from higher time frame, swing low points, large negative delta, strong volume, and of course price rejection. Before we start waiting for bearish absorption, we need to make sure that the current price is located at the key level from higher time frame. That's basically the foundation of whole setup. Then we switch to lower time frames and start looking for swing low points that the price might go to test. We can set alerts on them, and once the price tests those levels, we'll get a notification. Once the price drops below these levels, the first thing we want to see is high volume. That tells us there's activity. Then we want to see a large negative delta concentrated in the lower part of the candle with high volume. This signals a strong presence of aggressive sellers that the price doesn't want to accept. After that, we just need to wait for some form of rejection of these levels. That could be change of character, a close above the absorption candle, or price versus participants type of rejection. This gives us the signal. Okay, there's selling interest here, but the price is having trouble breaking this level. And on top of that, it has changed direction. Buyers are starting to take control. So at this point, we set limit buy at levels that make sense from a risk management perspective and stop loss below the absorption candle. So this is the basic formula we use when trading a bearish absorption. The first thing is always the key level, and then absorption, which we look for on lower time frames. A perfect example to demonstrate the bearish absorption is right here. The price was located at a daily support. On lower time frames, we were waiting for bearish absorption. This is a 5-minute time frame recording on the area of daily support. The price forms swing low points, which will be key levels for potential bearish absorption. After a few tens of minutes, the price went below these swing low points, and on the footprint chart, a large volume appeared with a strong negative delta concentrated at the lower part of the candle. We can also see increase in min delta, which indicates pressure of sellers. The funnel delta was also at the huge negative numbers. We can see minimal buying interest at this area, but the price still rejected this level. For us, this was a sharp signal to enter a long position. It's again very important to combine several confluences. Simply opening footprint charts and looking for absorption is a recipe for blowing your account. Always combine it with price action and look for absorption only where you actually expect it. So key levels, volume areas, etc. More confluences, the higher chance of winning. Go step by step. First, find a strong key level from higher time frames. Then, in this area, mark the swing low points on a lower time frame. After the price moves below this point, open footprints and start watch order flow. This way you gain a clear mechanical approach and you know exactly what you are waiting for.